I'm about to show you the strategy that I'm going to use for the rest of my life from the ground up so you don't ever need another one. And it doesn't matter if you're currently struggling at trading, trying to get funded, or even your first payout, or you just started trading, you'll be able to apply it because it only requires 3 steps and it's incredibly simple. And yes, this is the strategy that took me from unprofitable for 3 years to now receiving over 217 payouts. First, I want to talk about exactly why this strategy is the strategy that I'm going to use for life. It's because it has 4 different pillars. It is simple, repeatable, scalable, and it's based on first principles. With simple, one of the things that I've always said for traders inside of Funded Trading Blueprint that get funded in 90 days is that you should be able to explain the strategy on a napkin. With repeatable, the strategy cannot involve insane amounts of discretion, because if you're always applying a lot of discretion in your strategy, then every single trade is going to look different and you never know if you're sticking to something consistent. Scalable means not only in terms of money, of being able to risk more using this specific strategy, but also life. Because let me ask you, do you think that staring at the charts every single day for multiple hours and taking 10 trades every single day is scalable over the long term? No, you would give up very quickly. So this strategy gives you consistent trades, but it only takes about 1 hour a day to execute. And last but not least, for a strategy to be for life is that it has to be based on first principles, which means go from the ground up, understand what is important in trading and master those. So let's get exactly into what that is. Principle number 1 is going to be direction. This is the foundation of our strategy. Without direction, you will never have a trade. And if your strategy right now does not involve a hefty sum of direction, then it's not going to work over the long term. So first up is direction, and we're going to call this the daily bias and the session bias. Now, the way we're going to be looking at the daily bias is going to be on the daily chart. And the question that we need to ask ourselves is, what is the market choosing to respect? And as we can see right here, the market is consistently moving to the downside, and even though we have those strong pushes to the upside, the market is continuously failing to create higher highs. And after we completely reject and engulf this previous move, our bias is now going to turn bearish and we're going to have our eyes on the low, which eventually does get hit. But in order to execute on this, we need what we call the session bias. And the session bias is going to be seen on the 4-hour chart. So we saw on the daily chart how we had that strong move to the downside that resulted in the sweep of the low. But on the 4-hour chart, you would be able to predict this move earlier on by simply seeing how we have the strong market shift after we fail to create the higher high and we react to the extreme. And so even when we are at the 4-hour fair value gap or 4-hour order block, these reactions don't matter because you're going to pair the daily chart and the 4-hour chart, resulting in the move to the downside, fair value gap, and the tank to the sweep of the low. And I'm going to show you exactly how to execute on this and give you the exact framework that you can follow. So the process to finding the direction is going to be incredibly simple. We're going to go on the daily and on the 4-hour chart at 9:15 a.m. Eastern time, and then we're going to identify the key levels. Now, what are those key levels? The key levels are going to be fair value gaps and order blocks. And then we're going to ask ourselves, what is the market choosing to respect? On this example, we can see that the first signs of the market being bearish is us disrespecting this 4-hour key level, which is an order block. A little bit after, we disrespected the fair value gap, and a little bit after, we disrespected the order block. But we knew this already by seeing how the first order block was disrespected and how the daily chart was failing to create higher highs, which means the daily chart is bearish and the 4-hour chart is bearish, and that is direction. So step 1 is direction, which you're going to see on 2 time frames, which is going to be the daily and the 4-hour chart. And the second step are going to be key levels, which we are also going to see on 2 time frames, the 1-hour chart and the 15-minute chart. So notice how we're already going down time frames. Daily has a purpose, 4-hour has a purpose, 1-hour has a purpose, 15-minute has a purpose, and the 5-minute is going to have its final purpose, which is going to be our step 3. So let's talk about how to identify key levels. Most traders get key levels confused, and it's not because the key levels are hard to see, but because of what I'm about to explain next. For a strategy to be sustainable, it has to be simplified. So we're going to be looking for key levels only on 2 time frames, and we're only going to be looking for 2 types of key levels, order blocks and fair value gaps. The reason traders get confused is not because these are going to be hard to see, because they're looking for too many in too many time frames, and that gets you confused. And by the way, I use this strategy every single day on FundedNext, either CFD or futures challenges. Their futures challenge is very easy to understand. If you don't mind the consistency rule on the challenge, then go for the legacy. If you don't mind the consistency rule on the funded, then go for the rapid. Use code Kimmel to always get the best discount code and guaranteed to get paid in 24 hours. So now I'm going to give you a checklist, but first let's identify the key levels. On the daily chart, we can see that the market is failing to create higher highs and that we are respecting bearish key levels. So therefore, the daily is bearish. If we go to the 4-hour chart, we can see that the market is failing to create higher highs and that we're moving bearish. So therefore, the 4-hour is bearish. So today, we're only going to be looking for shorts. The 4-hour remains bearish before the market opens. And now that we have 9 a.m., let's identify the key levels that we have on the charts. The 3 closest ones. We have this bearish order block, we have this bearish fair value gap, and we have this bigger order block, which is acting as a wall, pushing price lower. Now we go to the 15-minute and we do the exact same thing. We have 1 order block, 2 order blocks, and last but not least, a fair value gap that was already respected. And notice how we have so many key levels right now on the charts. Here's a quick tip. When key levels overlap, these become very powerful key levels. So what you can do, instead of having all of these overlapping ones in order to simplify your charts too, you can simply have one key level that rules over them all, like this order block. So now that we have direction and you've understood how to call the direction of the day and of the session, we have the key levels. The only thing missing right now is the entry model, so let's talk about that right now. The entry model is pretty much what we've just done, and that's why I wanted to do it. So we're going to trade in line with the daily bias and the session bias. Then at 9:15 a.m. Eastern time, we're going to identify the key levels on the 15-minute and on the 1-hour. Then we're going to wait for a market open to those key levels, which means in this case, we would want to see the market moving higher towards these key levels. And then we are just going to be on the 5-minute chart looking for a 5-minute engulfing, because we're going to market order with the stops above or below the engulfing, and we're going to target a 1 to 2 risk to reward. So let's go to the 5-minute chart. So we're looking for that manipulation to the higher time frame key level and a 5-minute engulfing for us to execute on the shorts. We have the market moving higher towards that key level. We have market open right now. We're at the key level, the market manipulates and moves down. This gets every single trader thinking that the market is going to reverse. They enter in longs because they think, oh my God, the market just opened and it's going to move higher. And then we just move down. So now we know. We have a trade in line with the daily bias and session bias. We identified the key levels. We had the market open. We have the 5-minute engulfing. So now what we're missing is a market order with the stops above the high, targeting a 1 to 2 risk to reward. Let me delete this and let's see exactly how this goes. So we set our stop loss, we set our take profit, and now we just let the market do its thing. And quite a little bit after, we are out for a 1 to 2 risk to reward. And now we do the same process over and over again. We go to the daily chart. We identify that the market is bearish. Both the daily and the 4-hour are creating very strong bearish structure. At 9 a.m., we identify the key levels. So we have this very clear order block that is taking us to the downside, already gave us one reaction. And we go to the 15-minute and we do the exact same, which you can see that they pretty much overlap. So really, we don't need to create this one. So now all we do is we go to the 5-minute chart. We wait for market open, manipulation, engulfing, and then the 1 to 2 risk to reward. So this is market open. We have the sweep of the high, engulfing, the trade that looks the exact same as the previous one. We execute with the stops above the high, and we target the 1 to 2 risk to reward. And after just a few minutes, compared to the trade yesterday, we have our 1 to 2 risk to reward. Now let's do one more for good measure. We are at very strong key levels and we're starting to have the reversal. But obviously the daily chart is still bearish. And this is where the session bias comes in. Because on this particular case, you can see how we had that 4-hour strong reversal. So the session bias actually becomes bullish because we're at a very strong bullish key level on the daily chart, and the 4-hour has shown us a very strong reversal. Now we go to the 1-hour chart and we identify the key levels, which we have this bullish order block, and now we go into the 15-minute. We have this bullish order block, and last but not least, we have this bullish order block. Now notice how all three of these overlap. So I'm just going to delete this one for the sake of simplicity. On this day at market open, we just moved higher. So notice how all of the traders now are believing that the market is going to go to the upside. And now that the market structure is bullish, we once again want that manipulation to that higher time frame key level. So that could be with the 4-hour open. We manipulate down to that 15-minute order block and we engulf the previous candle, resulted in a long, stops below the low at 92 handles, and the target at a 1 to 2 risk to reward. So once again, we have the manipulation, we have the key levels, we have the direction, and we have the session bias, which is incredibly important. And after a little bit, we hit our take profit for a 1 to 2 risk to reward. All of this by simply understanding session bias and direction. I want to remind you that the reason as to why this strategy is a strategy that I'm going to use for life is because it's based on first principles. It has the direction that every single strategy needs. It has the key levels, which are crucial for a profitable trading strategy. And it's so simple that you can't mess this up. And that's why I'm going to be using this strategy, and this is the only strategy that you'll ever need. Now, if you want to see me breaking down the market every single day, then make sure to check the first link in the description, where we guarantee that you get funded in 90 days. You get full access to me and my trading strategy, live Q&As, live trading sessions, the private Discord community, and so much more. So if that is something that interests you in order to speed up your process of becoming a profitable trader, then check the first link in the description for Funded Trading Blueprint. And by the way, no, it is not free. Now, this is a strategy that I'm going to use for the rest of my life. This is a strategy that I use on FundedNext, which with code Kimmel, you can always get the best discount code and clicking the link right here. Now, if you want to see me executing live on this strategy on a recap that I made on YouTube, then check this video right here.